Hello and welcome back to the channel. Now, the original plan for today had been to do a video on fundamentals and specifically looking at hard forks and the hard forks of both Bitcoin and Casper. But I think in light of recent market action, as well as a number of people asking for an update and asking to be provided with some Hopium, instead, I'm going to get into the charts. We're going to do a deep dive on Casper and we're going to look at Bitcoin and macro as well. And when the people ask for Hopium, I will provide that Hopium, although we are going to have a balanced look. But before we get into it today, guys, don't forget to like and subscribe and also turn on post notifications so that you don't miss any of my future videos. So this has been quite surprising or unexpected price action because a lot of people, myself included, expected this move and this cycle here to essentially result in a new sort of impulsive move and a new significant all-time high. And we did hit all-time highs. We came to 20 cents just over, but it was not a significant all-time high at all. And we never really reached price discovery, being really rejected off that all-time high and that significant sell wall at 20 cents and above. So we're going to kind of get into this today. There's really two possible theories that I'm thinking about with this. The first of all is essentially that this was just a failed cycle. And what I mean by that is when we look at historical cycles of Casper, there's a sort of fractal that a lot of people have noted, in that we have a major cycle and then a mini cycle, and the mini cycle sort of fails to significantly put in a new all-time high. It, however, does make a new all-time high, and then you have a major cycle, and then a mini cycle, and then a major cycle, and a mini cycle. So this cycle, we were very much expecting to have a major cycle from this and significantly break the all-time high and reach the sort of 30 to 50 cent range. But clearly that did not happen. So the first, and I think most likely probable outcome of this and most probable explanation is that essentially this was just a failed cycle. And I have talked about this quite a lot within the Discord and within my Patreon, that because Casper cycles are driven and the driving factors of Casper cycles are much less than the cycles of Bitcoin, that these cycles are much more able to be influenced by external events and by sort of external forces and market sentiment at the time. So, for example, in this initial break of the all-time high when we came up to 19.7, that coincided with the essentially failed launch of KRC20. So while we had geared up and we had put in this, beautiful bottoming pattern, and then this beautiful impulsive move up to all-time highs, I think the failed launch of KRC20 essentially hindered us here and prevented us from making those all-time highs because it resulted in this sort of mini sell-off. And so we did again consolidate from that and kind of put in this bottoming pattern and looked like we were going again into that impulsive move. And my initial thinking was that this would just be a sort of right translated cycle and that we were just kind of going to peak to the right of when we initially expected, which would have been sort of mid-July. But then this break of the all-time highs was hindered essentially by the yen carry trade and that huge sell-off that happened. So if we look, the sell-off really began on the 1st of August. And if we have a look at Bitcoin and the corresponding price action on the 1st of August, that sort of coincided with a really quite significant sell-off on Bitcoin and kind of the real start of the yen carry blow up. So really Casper and this cycle was hindered by those two major things. So from a timing perspective, we did basically exactly what we were expecting to do. So we came down, had this area of peak fear down here, bottomed, and then we came into this next cycle. But really from a price perspective and a sentiment perspective, this cycle did not do anything like what we were expecting it to do and didn't reach either the higher levels of sentiment or the higher levels of price. So I posted this in the Discord on the 21st of August. So my base case is now that Casper has topped for this cycle, and from a price point of view, we have essentially had a failed cycle. Frustrating, but that is what the market is telling us here. Casper's chart is facing some headwinds. I now expect a period of underperformance against the rest of the market. As for downside, I think it's probably come down to the lower band of the adaptive power law, so around 14 cents is possible, and 14 has now been hit. From a timing perspective, Casper is doing what we expect it to be doing. However, from a price perspective, this has been a very stunted cycle. I've mentioned this a few times, but because Casper's cycles are smaller, they are more vulnerable to being influenced by market conditions. KRC20 and the yen carry trade have prevented sentiment from reaching elevated levels. This has also slightly reduced the future growth expectations of the power law, not massively, but by around 10 to 20% or so. However, once we do get above the fair value, this will once again bring these expectations back up. Likely not to the original calculated levels, but certainly higher than they are now. Also, as sentiment never reached extreme valuations to the upside, it is likely also that it will be muted to the downside here. On top of that, the version 1 oscillators have shown that they are actually accurate and that the 8 to 4 month cycle is holding from a timing perspective, and that the oscillators predict a bottom in 24 days, which brings us to the 14th of September. So based on the oscillator, price did rise in line with the oscillator, but then once the oscillator started ticking down, then price also started to face some headwinds from that. And so my initial expectation was that we were probably experiencing some sort of lengthening cycle, based on Casper's higher market cap, and that the all-time high would come later than the oscillator predicted. But these oscillators, or Vision 1, has actually stayed incredibly accurate for now, at least from a timing perspective. Again, like I mentioned, price never reached where we expected it to reach in this cycle. And this was also shown by the Casper pair against Bitcoin breaking down from this trend line that we had set. And now we haven't actually decreased as much as I had expected on this, but there has been a slight decrease and a period of slight underperformance against Bitcoin. So when we look at this, we are sort of in this falling wedge pattern by the looks of it, with this trend line being respected for now, but we're sort of failing to make higher highs. So whether we do break this trend line and kind of come down and sweep these lower levels, it's possible. It remains to be seen. However, the oscillators actually do work fairly well on this chart as well. And as I say, the oscillators are sort of expecting a bottom to be relatively soon. The oscillator itself will actually bottom on the 14th of September. But again, we are now certainly within that timing window where we would expect the bottom. So that is why I am sort of cautiously optimistic about Casper right now. And also looking at the Euclidean distance and the risk metric, they both ticked up sort of in accordance and in expectation with the oscillator. So, we can see that this oscillator essentially acts like a clock and is set based on what we expect Casper's fractals and Casper's cycles to do, whereas the Euclidean distance and the risk metric are both set by the price of Casper, and so both of those ticked up with the oscillator, showing that from a timing perspective, Casper's cycles are doing basically what we expect them to be doing. But again, from a price perspective and from a price point of view, we'd never reached those elevated levels. But based on these oscillators, which have been accurate up till now, we are expecting a bottom fairly soon. And I certainly think this is a potential candidate for a bottom, coming down to the lower band of the adaptive power law. Now, it must be said that because we have now spent a relatively large amount of time below the fair value, below this yellow line here, the R squared of the Casper power law is reducing slightly. So we're currently at 0.9532. We were at 0.9537. So, it's not a massive deviation, but the longer we do stay down here, the lower the correlation and the lower the confidence in the fit stays. So I will be obviously keeping you all updated on that, but currently, we remain having an extremely good fit, and Casper is doing, from a timing perspective, basically what we expect it to be doing. So it kind of begs the question now, was this a failed cycle, or are we now entering a sort of new phase and a new potential fractal? Because, as we know, Casper has the major cycles and the mini cycles, and we were very much expecting this cycle to be a major cycle. But there is also the possibility that potentially the fractal is kind of maturing and changing a little bit, and that this, instead of being a major cycle, was a mini cycle. And instead of going major, mini, major, we've gone major, mini, mini, and we've just had 2 mini cycles in a row. And potentially that means the next cycle will be going into a major cycle. But it really does remain to be seen, and we really do need more data on that, and we just need Casper to give us some answers on what it's going to do. So, you know, whether this next cycle goes into a higher price point than we would have originally expected, that is a possibility, but it is also possible that we reach kind of the same levels that we were expecting in the previous cycle of that 30 to 50 cent range. And, you know, arguably that would now constitute as a major cycle because, you know, the major cycles really are typical because they make a significant all-time high and they go into significant price discovery. And if we did reach that 30 to 50 cent range, then that would be now significant price discovery. So the path forward is slightly murky. You know, it's unsure and it's been potentially thrown off a little bit by this cycle, but as ever we are going to stay adaptive and do our best to sort of stay on top of the market and figure out early what this cycle is telling us. And, you know, I really very much expect the catalyst for this next cycle to be KRC20, because KRC20 is now expected to come out this month, and the, you know, hopefully this time successful launch of KRC20 to come out in September. And, you know, now currently the 8th of September, so probably in the not too distant future. And this likely will kind of give us the price action that we expected to see here back in late June, early July. And probably this price action will now be translated into this next cycle. So, you know, whether the fractal has changed or that this cycle was simply stunted because of market conditions, that remains to be seen. But we're just going to have to keep on top of that and keep trying to read the data as best as it is telling us. And if you guys do want some help with that and want a little bit more help navigating Casper's cycles, and also if you are interested in using some of these indicators, again, don't forget to check out the Patreon if that is something that would interest you and something that you think you could benefit from. But now we are going to get into kind of Bitcoin and the overall market and wider macro picture. So looking at Bitcoin's 60-day cycles, this wick came down, and this came down on day 63. And so the daily close on this wick was actually lower than the daily close, just very marginally, than we had in early August. So looking at it, we came all the way down to 54,000 and had a daily close. So, you know, it was a tiny bit marginally lower than the actual daily close here. So that kind of begs the question, is this the cycle low of this 60-day cycle? And this was kind of a fake cycle inversion at 31 days, or do we now have potentially lower to go on this cycle? You know, that kind of remains to be seen, but this does now line up quite well to be that 60-day cycle low on day 63. And that does correspond with the fear and greed indicator, because we did reach extreme fear levels of market sentiment. We came, minimum was 22 around 2 days ago. Yesterday was 23, and we have now bumped up slightly to 29, but, you know, still fear is extremely elevated and the market is extremely fearful. So kind of begs the question, what is going on at the minute? Because as we know, global liquidity is the main driver of assets and the main driver of world wealth. And, you know, while global liquidity has had a slight downturn, you know, it is very much expected to rise for the rest of the year and into late 2025. And looking at a longer term chart of global liquidity, this was the only one I could find online. Originally they said gold, crypto, and housing, but someone has put Voldemort for some reason. Not really sure about that, but including gold, crypto, and housing, not Voldemort. There's no magic going on here, although global liquidity is a type of magic, to be fair. But the original correlation of global liquidity in kind of the 80s and the 90s was 0.57. So it was a degree of correlation. You know, that's not nothing at all. But then really post, especially 2008, and 2008 was kind of the point at which global liquidity and world wealth and assets have started to really track each other. And the correlation is now 0.84. So that is an incredibly strong correlation and does lend a lot of evidence to the idea that if global liquidity is rising, which it is forecast to through the next year, then also global wealth, including gold, crypto, and housing, and the market in general, should also rise in line with global liquidity. And again, looking at a slightly higher resolution chart, we can see that liquidity is forecast to rise into 2025. So it kind of begs the question, what is actually going on here then? And the answer to that basically is down to this, and this is the US dollar against the Japanese yen. And so, you know, I have spoken about it a little bit, but the Bank of Japan raised interest rates, which has basically caused a huge amount of fear in the yen carry trade. And so the yen carry trade has basically caused this entire sell-off. So on the top here is the dollar versus Japanese yen. In the middle, that is the price of Bitcoin. And on the bottom is the price of Nvidia. And so as you can see, there is an incredible high amount of correlation with these three assets, especially since, you know, late July and going into the real main liquidation of the yen carry trade. So that is why assets currently are facing a headwind, even though global liquidity is rising, because there's just this one sector where there was a huge amount of risk and a huge amount of leverage built up and had kind of been left to build up unchecked for 2 to 3 years. And now that the Bank of Japan is threatening to raise interest rates again, there is a huge amount of fear and a huge amount of sell-off happening in the yen carry trade. And so it kind of begs the question, is the Bank of Japan actually going to follow through and raise interest rates? And if they do, then it is more than likely that we will see more downside on the dollar Japanese yen, and therefore also quite likely that we will see more downside in Bitcoin and in the stock market, and looking at Nvidia specifically. And this is kind of also exacerbated by the fact that the US is now very likely to cut interest rates at the next meeting. So currently the expectation is a 70% expectation of a 25 basis point cut and a 30% expectation of a 50% basis point cut. But ironically, either the Bank of Japan raising interest rates or the US cutting interest rates is actually potentially going to exacerbate this and potentially cause more of a sell-off in the dollar versus the yen. So if there are any players or any stragglers of the carry trade who didn't get liquidated here, then there is the possibility for more downside. So, you know, I did say this video was going to be about Hopium, but there is potential for more downside in this. And again, likely that will drag the rest of the market down. So what that would mean for Casper, it remains to be seen. Whether Casper just simply follows the rest of the market and, you know, continues the sell-off, then that is a possibility. But it is also a possibility that Casper does buck the trend, as we know it does in the past, and it has done a lot in the past, and something like KRC20 is enough to make us overlook a potential sell-off. And it's interesting because the sell-off yesterday, I think it was, or it was on maybe the 5th and 6th of September, you may have noticed that Bitcoin was actually underperforming against the rest of the crypto market. So if we have a look at Bitcoin dominance, where is it? Or if we have a look at Casper Bitcoin, yeah. So through this period on the 5th, 6th, and up till now, up to the 8th of September, Casper and also the rest of the market were outperforming Bitcoin. And the reason for this is because a lot of the dollars of the yen carry trade made it into traditional assets like Nvidia and like the stock market, there would have also been some of these dollars that made it into Bitcoin as kind of a more risky, a more high risk bet. But it's very, very unlikely that any of these dollars made it into Casper. You know, as much as we love Casper, we have to understand that it's very unlikely that Casper is on the radar of a lot of these hedge funds or, you know, bigger prop firms and bigger trading firms. So this sell-off is being caused purely by a sell-off in Bitcoin, and kind of, you know, the market following Bitcoin to an extent, whereas the Bitcoin sell-off is being caused because there is a scramble for collateral and closing the positions and, you know, trying to unleverage the yen carry trade. So it is also possible that if this does take another leg down, that Bitcoin suffers the worst and the rest of the market doesn't actually react as much, because again, those dollars needed to close the positions on the carry trade are coming from Bitcoin and are very much not coming from the rest of the market. You know, potentially some from Ethereum, but you know, very, very unlikely that any are coming from Casper. So looking at Bitcoin in relation to other market cycles, we are basically exactly on track. So we are from the bottom, basically exactly where we were in both the 2017 cycle and the 2021 cycle. So it's interesting that sentiment is as low as it is at extreme levels of fear, and that we are basically doing exactly what we are expected to be doing and are exactly on track compared to the other cycles. And this is echoed by the Rational Root, who points out, you know, max fear and we are here. So we are basically doing exactly what we expect to be doing. And then looking at some fractals from the past, CryptoCon published this comparison of the 2019 versus 2024 cycles. So we had basically very similar price action of this descending channel, kind of making lower highs and lower lows into this channel, but then on the 8th touch of the lower channel, which we have basically just had, that was the catalyst to break out of this channel. And so that would make sense based on the huge amount of fear that we have here. And also, you know, a lot of people have been pointing out that this potentially is just a huge cup and handle that has been forming, and that this entire sell-off here in the bear market of 2021 and 2020 was the cup, and that we have been in this parallel channel, which has essentially been the candle of this move, and that potentially we are going to break out. And that would line up more with what is expected from a normal cycle, with kind of, you know, this move, which was a little bit elevated compared to what we would expect. We did actually, you know, break the all-time high prior to the halving, which we've never done before. But then we've had this sell-off, which has basically corrected us and taken us into the level of price appreciation from the bottom that we would expect. And we are now kind of going into that period where we would expect to see the acceleration of price action. So if it is based on prior cycles and prior price action, then basically we are exactly on track. And if history does play out, then likely we will start to see a break of this channel and accelerating price action into kind of the final stage of the bull market. Whether that is going to be a blow off top or not remains to be seen. But then again, there is also the possibility that if a further liquidation does happen in the carry trade, that we will have kind of a significant wick down, and that would actually line up more closely with the period in 2019, because, you know, it's this parallel channel here that was being pointed out, and the break of that. But then what they failed to mention is that we did actually have this huge dump afterwards. So, you know, potentially that is what's coming as well. We have this breakout from this channel, and then we have a final wick to the downside, which ironically could be the catalyst for the printer to get sort of turned on in full force, and that this wick is kind of this final liquidation wick, maybe a little bit like this down to 40k, and then that is the catalyst for QE Infinity to actually come in, because, you know, that would likely also represent something breaking in the credit markets and the Fed pivoting from quantitative tightening to quantitative easing. So maybe this is the move that everyone's waiting for, but it is also highly possible that it doesn't come and we do just break out of this channel from here, and that essentially there will be no real credit event, and that while things may slow slightly in the economy, there will be no refinancing crisis, and global liquidity just slowly starts to rise and bring up all assets with it. So if we have a look at global liquidity here now, this is on a month-on-month basis. If we put it in line format, then we can see we have broken out. And again, this is expected to continue and basically be the start of the next big move in liquidity. So, you know, it's probably pretty dubious drawing a bars pattern on global liquidity, but if we do something like this, then, you know, this is kind of what is expected now, and what global liquidity is expected to do based on the 3.5 to 4 year global liquidity cycle. And I want to have a quick look at this, because the period that we are in now, of basically financial repression and liquidity cycles and kind of the controlled balance sheets and controlled economy, and essentially fiscal dominance with government finances dictating things much more than the real economy does, and it dictating markets. So if we have a look and we go back to the last time that we had this, which was in the 50s and in the 60s, as you can see here, there was kind of this very, very predictable and cyclical pattern within assets and within the stock market at that time. And the period that we are going into now, on a kind of fiscal basis and on a kind of macro basis, is the most similar to this period of the 50s and the 60s of, you know, huge financial repression and basically trying to get out of the huge debt burden that many countries were in at this period. So if we do again a dubious bars pattern and kind of overlay this based based on the timing of these cycles, which were again very close to the 4-year cycle, if we kind of look at this, then based on this fractal, then there still is a significant amount of upside to go in the stock market, and the bottom would come roughly when we expect it in late 2026. That would be kind of the next time we expect liquidity to significantly bottom out, or around then. And so this, obviously I don't expect this fractal to play out exactly, but this period I think is kind of the most akin to what we are going through now and the most likely scenario. So, there were never any huge monumental downturns in this period. The last one came in the late 60s, and that was a drawdown of 44%, but the rest of them were kind of a lot more muted and a lot more mild. So this one was 32% here. This one was much less, only 20%. So this also sort of explains why this bear market wasn't anywhere near as bad, and it also wasn't associated with any significant credit event or significant recession. This was actually a bear market rather than just a pullback, and it kind of rhymes and looks very similar to the price action that we saw in the 1950s and the 1960s. So, very much my expectation is that this is much more like the price action that we will see, and instead of having this huge blow off top that some people are expecting, and then after the huge blow off top, this huge monumental drawdown and kind of global depression like we had in the 1930s, based off the Great Depression. So I think that's why this scenario is much, much less likely than the kind of mild bear markets that we had here, and also going back to the 50s and 60s. And instead of looking like this and having this huge global crash and global depression where assets don't recover for sort of 10 to 20 years, instead we'll kind of have this very controlled, very cyclical, and almost, very kind of low volatility in many ways. And that is assuming that they can keep a handle on the debt and keep a handle on inflation. And the other possibility in the other scenario is a huge, huge melt up in all assets, in all hard assets, so stocks, real estate, crypto, and the metals. And they can't keep a lid on inflation, and we massively accelerate to the upside. But again, that is also not really a scenario that anybody wants to see, because although assets will have massively appreciated in that scenario, so will have all goods and services. So, a loaf of bread is going to be costing you $20 to $30 if that does happen. So that is why the base case is no blow off top, that we have some more upside in the market, and then we have a downturn in 2026 based on the liquidity cycle, and based off the financial repression and controlled economy and fiscal dominance that we have now, as we did in the 50s and 60s. And I also do want to kind of bring this up as well, because blow off tops are very, very rare in the stock market. Much more often and much more likely in the stock market, you instead have these rounded tops, because basically the tops of the stock market are signified by optimism and kind of calmness, and then the bottoms and the crashes in stock markets are generally capitulations, and they are fear-driven moves, and that's why it's kind of rounded on the bottom and then steepens into the crashes. But that is very different compared to what we see in both gold and both Bitcoin, because gold and Bitcoin trade very similarly in terms of price action, because gold, instead of having rounded tops like the stock market does, has blow-off tops and kind of fear-driven tops, whereas the bottom of gold and the bottoms are much more kind of a reaccumulation and a period of optimism. And kind of the same was true here, with a relatively steep blow off top and then this rounded base. So whereas gold and also Bitcoin have these, pretty distinct blow off tops and then extremely rounded bottoms based on essentially fear and also FOMO drive these moves, it's very, very rare that FOMO drives the top of the stock market. And it's much more likely for a stock market top to look more like this, and then the crash of the stock market looks like this. So you can kind of think of the stock market as kind of the opposite of gold and Bitcoin, because the bottoms of the stock market look more like the tops of gold and Bitcoin, and the bottoms of gold and Bitcoin look more like the bottoms and the crashes in the stock market. So it's quite a useful observation to have, that generally the tops of stock markets are a period of calm, and the bottoms of the price action of gold and Bitcoin are also a period of calm, but then the tops of gold and Bitcoin are a period of basically panic and fear, and particularly FOMO, and then the bottoms of the stock market is a period of panic and fear. And you can go and look at this for yourself. So if you get a long-term chart of the S&P 500, really there's only ever really been one blow off top, which was I mean, you could argue this was in 87, but it wasn't really a huge acceleration to the upside. It was more just a huge sell-off due to Black Monday. Really the only significant blow off top we've had in the stock market was in 1929, and since then we haven't really had one. Now individual stocks have had them, and certain indices like ARK, I would argue that this was a blow off top, but blow off tops are very, very rare in the stock market, and it would be relatively unusual price action for us to see. So having a quick look at macro data, so unemployment did actually tick down slightly, but it is clearly still in an uptrend, so it remains to be seen how steep and how high this will go, bearing in mind that the numbers are slightly deceptive at the minute. However, looking at layoffs, we did actually tick up slightly in August, so this potentially is now in a uptrend here, and this will have to be monitored to see if this does start significantly accelerating, because if this does start to significantly accelerate, then that is a good indicator that the economy is seriously weakening, and does lend credence to the theory of a huge global recession coming in. But that is kind of everything I wanted to get into today. So, you know, cautiously optimistic with Casper right now based on the fractals, and so the bottom of this oscillator comes in on the 14th of September, and then the next top of this fractal will come roughly, it will be 116 days after the top of this one, so that will be around early to mid-November is kind of when the next top would be expected, based on prior price action and based on the fractals and the cycles. So continue to monitor that. Again, if you do want a little bit more help navigating the Casper market, again, don't forget to check out the Patreon. But other than that, thank you very much for watching, and until next time, cheers.